Welcome back, everyone. Welcome to First View. Today I'm joined by Layla White, who's the founder and CEO of Tech Passport. Welcome, Layla.
Thank you for having me. Lovely to see you.
Yeah, you too. Could you start by just telling me something about Tech Passport and just sharing what's the issue that you're trying to address with it?
So we are a platform, a SaaS platform, and the problem we're addressing is enabling our clients to be able to identify either direct or indirect risks across their whole supply chain. So, from an operational resiliency perspective, which is key and fundamental, I think, right now when we look at outages and incidents on a global level, geopolitical issues, and what we're seeing is an increasing trend in terms of outages that are directly related to supply chains.
Yeah, I guess it's quite topical in the UK, isn't it, with the Marks and Spencer's website issues that are going on. I guess that's relevant in this instance, is it?
100%. Actually, we were having a conversation over the weekend, and it's been quite made clear to this particular person that was a complete issue was completely related to supply chain, and that's where the vulnerabilities sit. And actually, David, when we look at January, where there were outages across UK banks on payday, I think it was cited 1.2 million customers were impacted. Again, it was all supply chain issues. So yeah, it's a big topic.
Yeah, and I think you have to go back about a year till we get CrowdStrike. I think CrowdStrike was an interesting outage, wasn't it? Because you had a lot of clients who said, "Oh, I don't have CrowdStrike, I'm not affected." All of a sudden, their SaaS platforms, their other suppliers are affected, and they're in trouble too.
Yeah, 100%. I think CrowdStrike was a bit of a wake-up call for the sector. We are definitely seeing movements now for our clients thinking, actually, we need to be more resilient in this. But we had a mixed bag of responses from our clients, from we are a direct client to indirect and our services are being taken down, to actually our third parties, or therefore like that supply chain's being affected. In different cases, we had from clients in terms of the impact from 500 engineers just in one department across a large bank having to down tools for the whole day so they could do a root cause analysis, which cost hundreds of thousands of pounds, to financial institutions not being able to close on the day and losing millions of pounds. And so it was a big impact. And I think you're quite right. It wasn't just necessarily the direct clients of CrowdStrike. Until then, probably a little unknown across the industry in terms of the visibility of them. But it was that indirect impact that touched so many financial institutions. And depending on where you are in the world, clients in Australia saying we had such a big problem because we woke up to this. And by the time it hit the US, it was a lot less because things were being sorted. But nonetheless, a big impact across not just financial institutions, but multiple industries. So a really important kind of turning point, I think, for the financial institutions to start to say, we need to understand our operational resiliency, not just from our internal systems, but externally and where we have those
It's
dependencies.
much more than just being responding to regulatory changes from the EU and other places. It's not just a DORA platform.
100%. And actually, David, when we started to look at building out this additional module in our platform, we were looking at it from a regulatory perspective, particularly around DORA and UK critical third party regime. But what's becoming really apparent is that the CTOs, the CIOs, the operational resiliency teams are looking at this and saying, even without the regulation, this has an impact on our reputation. This can have an impact on our customers. It's about competition. It's all of those things. And for that reason, we're seeing financial institutions in America, all of the leading financial institutions in New York, for example, this is a board level challenge for them, irrespective of regulation, because they understand that operational resilience is about the supply chain as well. It doesn't just stop at their internal system. So yeah, it's much more than just the regulatory side.
Yeah. I suppose some of these risks are quite intangible, aren't they? Because it's not like it's managing risk in the sense of like traded risk or generating revenue in that in that sense. It's more around this sort of intangible operational risk, which I guess we've all lived with in business over numbers of years. So what's changing that makes people say, actually, I do need to map this? That is it the world has got more complex, the supply chain has got more complex, or what is it that's really driving it?
I think so. I think if we look over the past 10 years, the dependency on cloud services has increased. The dependency on SaaS has massively increased. And, we're a big advocate for that, which is great. But the vulnerabilities lie within those suppliers. Like the biggest area of risk, according to our clients, for them is in SaaS providers that play a fundamental part in their ability to deliver new services and remain competitive and remain present, from a tech perspective in providing services to their clients, their customers. But if we think about business continuity as an example, financial institutions will have like strict processes and procedures and policies around business continuity and will expect their third parties to adhere to that. But the further down the supply chain you go, that fourth party that's a supplier to the third party or the fifth party or otherwise won't necessarily understand that. They won't necessarily understand that they have to have strict business continuity processes in place, because they won't know that they're part of a larger piece of the puzzle. So I think what we see with regulation is it's trying to kind of change it, or at least it was, I think with DORA piece, it's trying to move that along to say you're part of a critical service. But really, without having that data, you can't even start to map your business continuity plans. If I turn this off, what happens here? And so the further down the supply chain you go, you could have like a fifth party that could be providing services to tens of your third parties, but they don't know it. And so their processes, their change management processes, their business continuity process are much more likely to be suboptimal in terms of what the financial institution is looking for, which is what is dictated certainly by regulators as well. So I think the overall dependency has changed. It's definitely increased, and quite rightly so. There are great values in terms of leveraging suppliers, third parties, etc. But that dependency has increased risk. Now, the alternative, you could argue, is to say, okay, we'll bring all our tech in-house. But that doesn't help from a financial perspective. It means slower releases to market in terms of products, innovation stalls. And so there is a place for it. And so I think financial institutions are now looking at this, the op-res teams, the CTOs, the CIOs, who are, accountable for operational resilience, and saying, we can't move away from it. We have to strengthen it. We have to get this data because we have to be able to see that end-to-end mapping.
So, I mean, SaaS was always touted as like almost the future of all technology, that you would just procure a service rather than that. Is this actually changing the way that highly regulated institutions? Because it's probably not just banks, is it? Is it changing the way that they're thinking about technology and how they procure it?
I think so, and certainly what we're hearing from the sector, is certainly in response to regulation, but also outside of regulation, is there's now a requirement during RFPs for third parties who are bidding for work to say, here's my supply chain. We have heard notably from a few clients that if they had two suppliers who are bidding for the work, if one supplier had their supply chain and the other one didn't, they would go with the one that has it because of the risk associated to it. We are hearing that this information has to be picked up really, really early in order to help the financial institutions manage it. But that in itself puts a lot of pressure onto the suppliers in terms of getting that data, maintaining that data as well. And it's complex. And then we start to think about large suppliers, hyperscalers, where this presents a whole new risk as well, because cloud providers, for example, aren't going to want to expose their supply chain to anybody for multiple reasons, because if it gets into the wrong hand, the data gets into the wrong hands, it could bring down not just an industry, but multiple industries. But also it represents a commercial issue as well from a competitive side. So there's lots of kind of complexities in here that we're starting to see evolve, whether it's from the financial institution, the large service or technology providers, all the way down to the smaller ones and the impact that they're feeling.
The supply chain, I think you mentioned it was really it's like fourth, fifth, providers. Yeah, it can be quite deep, can't it? And I think your platform goes down to as many levels as people want it to be. But how do you get that data? Where does it come from, and how do you keep it up to date?
Great question and great point. So if we think about one third party that a client might have, if you assume that that third party has four of their own third parties and each of them have four of their own third parties, that creates quite a lot of data and quite a lot of touch points to be able to, one, get access to from a bank's perspective, and to be able to manage it and to be able to visualize it, to look and see where see the risks associated with it. So we capture that information directly from the supplier, which is really, really important. And ours is the only one in the market that's able to collect data from every single type of supplier. So we don't depend on website scraping, which is really important. It comes from the supplier. And it has triggers within the system to make sure it's updated. So we have triggers in the system to make sure that the data is kept up to date, which is really, really key. But the point about this is that we've seen that supplier banks or financial institutions who are trying to map this information on a one-to-one approach are struggling. They can't really get past the fourth party. Trying to get that data is really, really difficult. Whereas we've been able to do this because suppliers have got a benefit here for them as well. It means they're not having to repeat the information over and over again. And going back to my point earlier regarding RFPs, it's now a competitive advantage for suppliers to be able to say, here's my supply chain. And so they're able to use the platform and use a code and grant access to their product or to their domain for a set period of time that they set to provide to their potential clients. And so there's a real kind of win-win situation going on, not just for our suppliers and also for the buyers as well. But it's in terms of accuracy of data, we get asked quite a lot about how we can ensure the data is accurate. But that's all handled within the system, which is part of a handshake. Basically, it's a yes, I have a service that I'm providing to this client, and that handshake is controlled by both parties. So the accuracy in the platform is really, really high.
It's interesting how supply chain can always become a competitive advantage that, and where you're able to detail it. And I guess if you could see that if you go down into adverse publicity as well, that maybe it's less so in financial products or software products, but when you get down into like retailing products, you really need to know that someone's not using child labor or something, someplace in the supply chain that's then going to embarrass you. So this whole understanding of supply chain seems to be becoming a lot more important to people as we go across all industries. It's not just finance. Are you seeing it outside of finance as well, or is it just really a financial play?
100%. I mean, to be clear, our platform is focused purely on financial institutions at the moment, but we have been having conversations with other sectors about this. I think if we consider the geopolitical issues at the moment, I don't know about you, David, but I'm hot on all the news around the world at the moment. But we think about like tariffs, for example. This plays a huge part in terms of availability of resources, not just from a physical form, but even like from a resource perspective, because it will put prices up. And even if we think about like from a regional war perspective, one of the key things that we've had from some of our clients in the US who were not impacted by regulation is we need to ensure that our supply chain isn't in any way, shape or form being delivered by someone in Iran, for example, or Russia. But without this data, there's no way of telling that. There's no way of identifying that risk. And so for a large financial institution in the US, this is a big, big problem, and one that our platform solves with the data we're collecting and the way we're collecting the data. And for us, it's about making those risks and those vulnerabilities available in a really strong visual format where they can interrogate the data, but not just with lines and rows of data, but with strong visuals to be able to understand those concentration risks, those geopolitical risks, And so, yeah, it goes across the board, not just from financial institutions, but multiple sectors. And I don't think, David, we're going to see this drop off. I can only see this as increasing in terms of the risk, in terms of the need to address it, in terms of the need to be proactive. Because what's the alternative? They're not going to switch their services off from third parties. And I think it's now moved from a matter of, if this happens to me, if I have an incident related to a supply chain issue, to when. And we saw that with CrowdStrike. We've seen that over the past few months in the UK. We've seen that with power outages all across Europe, Spain only recently, last week. A few weeks before then, it was across France and Spain. So it's really now a matter of when. And then from a financial institution's perspective, from an op-res, CTO's perspective, where they have that obligation on them to make sure their services are up, it's how do I protect our clients as much as possible and reduce the chances of that happening. So I want to be able to see that data and plan and mitigate. And also, if it does happen, how do I bring my services up really quickly? Because that cost implication is tangible. It's huge. It's lost revenue. It's impact to customers. It's regulatory fines. It's all of the above. And actually, on another level, from a regulatory perspective across UK and EU, for some, in extreme cases, it can mean a criminal record. So, and I think this is the case, I would say, probably maybe to different extremities, but across multiple sectors.
The world seems to be becoming a sort of a lot riskier and a lot less stable place. So I can see the value of being able to do this. So I can see how supply chain mapping is going to become more important over time. Leda, thank you so much for coming on First View. It's great to have you here, and I'm sure that we'll put a link in the video, so anybody who would like to contact you and see what Tech Passport are doing, I'm sure they'll be able to click on that. So thank you so much, and good luck with everything.
No, thank you for having me. It's a pleasure.